Hey, everybody, welcome back to today's Market Explained. This is Brian Castle, your host. We are doing an interview episode today. And part of the reason we want to do an interview episode is we want to talk to some folks that are senior and experienced and experts in the real estate market. We hear all this talk about affordability, and they really kind of mean real estate, obviously other consumer goods and everything, but real estate's really a big thing. We have with us today, I consider a real stalwart in the real estate markets, a real expert, a guy named Mr. Bill Boscow. Bill, welcome to the podcast.
Brian, thanks very much. It's great to be here. I appreciate you having me on the podcast.
Absolutely. And Bill, you worked in single family home project companies. You worked with manufactured housing. You worked with all different types of real estate. And I think you would have a really good perspective on what's going on. It just seems like the real estate markets are very jammed up. We seem to have a huge supply shortage. Um, Bill, what's going on in the real estate markets? How did we get here, and how do we solve this big problem?
Well, I wish there was a very simple five-word answer, Brian. It's really a multifaceted situation, and it's not surprising when you consider the real estate market and how diverse it is, whether it's the type of residential real estate that we're speaking of, whether it's the area that we're speaking of. By that, I mean urban, suburban, exurban, for that matter, state by state with the different regulations that states will have. And then on top of that, you overlay all those considerations with where interest rates are today versus, let's say, 5 years ago. Although I will say that when my wife and I bought our first home, let's see, it was in 1989, and we were so excited that we were able to secure a mortgage at 12%. Uh, so
Imagine
yes,
that.
I'm dating myself, but the point I make there is it's a very cyclical industry, is it not? When you
Yeah.
consider where we were way back in the 80s, where we were prior to the great financial crisis, through the teens, for that matter, during the pandemic, and where we are now. But to your point, when we take a look at the environment, as far as current day, we are experiencing an extreme shortage, I would say, of housing. And as far as the stats go, depending upon the statistic that you would look at, we're anywhere between 4 million and 5 million units short as far as housing is concerned in this country.
Yes. Well, and isn't this really the exact opposite of the way it was in 2008, Bill? I mean, I remember, people were buying three and four homes with the same equity. People were buying no money down homes. They were buying negative AM properties where they don't pay their full mortgage and their mortgage goes up. I mean, there were all kinds of really crazy things going on back then, and it caused such an oversupply that it took from 2005 at the high to 2012 to finally clear all that supply. So
Right.
now we're in the exact opposite position, aren't we?
We are. And not just in terms of supply, but to your point, back in those days, it was quite easy, was it not, to obtain financing.
Mhm.
Now it is very, very difficult when you look at the price of housing and when you look at the median income of people, the down payment, number one, and just what a mortgage represents in terms of percentage of monthly income for most people, number two, makes it unfortunately prohibitive
Mhm.
for people that would otherwise be first-time home buyers. Again, in other times, now that just is not a viable choice for many, many people.
So it used to be, Bill, I think, what was it, 25 to 30% of your disposable income should be no more, no, your payment should be no more than 25 to 30%, but now people are 40, 50% in some cases, aren't they?
Definitely,
Yeah.
exactly. It's just and it doesn't take there's no need for doing extensive budget analysis in terms of if you're taking up over 40% of your income just to pay the mortgage, property taxes, et cetera, doesn't leave a lot left over for people to take care of other fixed expenses, for that matter, variable expenses, to start a family, you name it.
Yeah. So, now because we're in an election season again, both sides are kind of arguing about, the affordability issue. And our president came up with a proposal, this executive order. You want to tell us a little bit about that, Bill?
Well, sure. And a lot of people listening to the podcast here will remember that first President Trump made a statement. Oh, we're in early February right now. So this is back in the middle of January, saying that he believes that one fundamental reason for the housing shortage, or the unaffordability of as far as buying a home, is due to the level of institutional ownership, for example, in the single family rental market. And he believes, and an executive order was signed in the last week of January, that legislation should be enacted, hasn't been enacted, but he believes it should be enacted, which provides barriers, if not disallows institutions from acquiring and operating single family rental housing.
And is that a real thing? Are institutions owning too many homes?
Well, that's a great question. And there, as you might imagine, there were numerous responses to the president's statement or concerns. And again, hey, I don't think anyone should object to the concern that there is a housing shortage. Question is, well, what is causing that housing shortage? And is it institutional ownership? Well, an interesting statistic is that in the single family rental housing segment of residential real estate, less than 3%. In fact, I believe the statistic is about 2.5%. 2.5%, only 2.5% of all single family homes that are rentals are owned by institutions. So it's a
Mm.
very, very small piece of the overall ownership of this particular segment within the residential real estate. And in fact, by far and away, therefore, the ownership is really through, what's, for lack of a better term, mom and pop owners.
Hmm.
Um,
Okay.
and just it's interesting, just by on a personal note. I have an uncle who lives in Tucson. He owns 3 single family home rentals in the corridor between Phoenix and Tucson. So he owns it obviously for the income producing aspect. But whenever I speak to my uncle, he talks and laments the fact that it is so difficult to find good tenants. It is so difficult to maintain and operate these rentals. It's very, very difficult and inefficient, really, from an ownership perspective, when you have mom and pop operations owning diverse single family rentals.
Okay. Interesting. Well, so it doesn't sound like this is really that big of a problem, but the president did that executive order anyway. Maybe they're trying to keep corporations from buying up a lot of homes, but it doesn't sound like a big deal, does it, Bill?
Uh, no, it doesn't. And there obviously, there, as is often the case, there are different points of view in terms of institutional ownership and what its impact is on a segment of the real estate market, such as single family rentals. There is a camp which will support the fact that, hey, institutional ownership actually helps control the price of housing. Uh, but yeah, regardless of what camp a person might be in, the fact remains there is a severe shortage of housing. Whenever you have a short supply and you have extreme demand, again, remember that shortage of housing that we talked about earlier, that's
Hmm.
going to impact pricing.
Yes. Okay. I'd like to get your input on a couple of other ideas that we've heard around. They have this concept of additional dwelling units where on the same property they can build another small unit of sorts, or maybe a unit above a garage or something like that.
Mhm.
And then there's also this concept of tiny houses.
Mhm.
Um, what's that all about, and can that really do anything much for the market?
Well, uh, I I'll do my best to answer your last question first. Will it do much for the market? I think the market needs help in multiple ways or from multiple different directions. So ADUs is the acronym, auxiliary dwelling units. Certainly that can help as far as address the housing shortage. Tiny homes. It was interesting. This is back, 5, 6 years ago now. It seemed to be an area that a lot of people thought held a lot of promise, but it seems that they that really hasn't moved the needle in terms of addressing the shortage. But really, my point is that it needs to be a multi-pronged approach, whether it's a combination of ADUs, tiny homes, manufactured housing communities, mobile home parks, in other words, and for that matter, the new construction of single family rentals, which a lot of the national builders, such as Lennar, for example, are focused on now. It's interesting in that the builders are uh, building as much as they can. The other thing I would add is back to your point on ADUs. Well, that could be part of a solution in certain parts of the country. For that matter, certain areas that might be thickly settled, but it is just only a small part of the solution. Some
Okay.
areas of the country might have regulations in place that prevent ADUs, as an example,
Uh,
or tiny homes, or for that matter, mobile home parks. It really depends. That's why it really needs to be a multi-pronged approach. It being ultimately solving the severe housing shortage that we're looking at today.
okay. Lots of other ideas too. So you think it's a multi-pronged approach. I think that's probably right. But the administration has to get about it. We talked about unique financing programs. Like, what kind of things could they do differently, Bill, that would just kind of get the market unjammed using financing?
Well, it's one thing that we are talking about, Brian, before we began this podcast is there are a lot of homes nowadays that where really just a fraction of the home is being used. So, for example, a couple that were there at their point in life where their kids are now adults and have left the house and have their own homes, that sort of thing. They're left with a pretty large house, 3, 4 bedroom house where only one bedroom is being used. And a lot of the rest of the living space is really not being used that much at all. And those folks might have interest in downsizing, but there might be a lack and therefore a need of certain housing programs that would allow them to control the potential capital gains issues and so forth, that if there were such a program could stimulate the transition of housing from one family to the next, make housing more affordable for the potential buyer, that sort of thing. So again, we get back to that phrase, a multi-pronged approach. One part of the prong, or one prong, is the need for different types of housing. The other part, to your point, is hey, well, let's see what might make sense from financing programs to stimulate the housing market. And what we're talking about here is maybe the transition of housing from one owner to the next.
Mhm. Very interesting. And Bill, while this is all happening, we've also, as a hangover from the pandemic, still have a big issue in the major cities, in the urban areas where there's lots of capacity, in Chicago and New York, LA, the big cities. So there's a little bit of repurposing going on too, isn't there?
Well, there is some, but maybe the question is, can there be more in
Yes.
terms of repurposing? To your point, you and I are based here in Chicago, but almost any large city, the vacancy rate of office space is pronounced, and in that case, can there be programs put into place to convert some of that vacant space into much needed housing within an urban environment? Some of that is occurring, that transition from office to residential, but I would submit that there is a lot of opportunity still on the table to have some of those buildings transition to accommodate some of the residential housing shortage we're seeing in the large cities. So that's obviously a potential solution in the urban landscape, maybe not so much in suburbia, in more rural areas, but for urban areas, I would like to see that being the conversion into residential housing would continue.
Brian Castle. I'm the CEO and founder of Four Star Wealth Advisors. Now, we built Four Star on one simple belief that every client deserves clarity, confidence, and strategy built around their financial story. For over 40 years, we've guided clients through every market cycle, helping business owners, families, retirees protect what they built and then grow their holdings to meet the needs over their entire life for them and their family in the future. We are fiduciaries, not salespeople, and that means we sit on the same side of the table as you always. So from personalized portfolios to advanced tax and estate strategies, everything we do is about creating long-term freedom and peace of mind for our investing families. So if you're ready to align your wealth with your goals, visit fourstarwealth.com. Let's start building your future one smart decision at a time.
And you.
Well, and that's a good idea. And then back in 2017, Senator Tim Scott, working with President Trump, passed the Opportunity Zone legislation, and that enabled special tax breaks for investors to invest in certain areas that were considered to be underprivileged or blighted neighborhoods and things like that. And we've invested in some of those, in fact, here in the south side of Chicago and certain around the country in San Jose, California, certain areas. Maybe expanding Opportunity Zones, Bill. What do you think of that?
I think there's, yes, at the risk of having to be a pun, yes, there's opportunity for additional opportunity zones. No doubt about it. When you take a look at some of the areas of the country where that would provide, obviously, favorable tax incentives, but obviously there are parts of the country that, especially in urban areas, that can really use a boost and redevelopment. So that is certainly, again, we get back to that, the use of the term multi-prong. That should be one of the prongs. And you mentioned already the south side of Chicago as an example, downtown San Jose. I know the Four Star works with a great group that's involved in redevelopment in that area, and a host of other urban areas of the country. Just makes sense to take a look at.
Absolutely. Well, good. Any other ideas come to mind on the multi-pronged approach?
Well, yeah, really, well, the other idea certainly is the area where the company that I represent, Resi, is involved with, which is, again, single family housing. There are a lot of people that would love to be a first time home buyer that are just not at that point yet. And so with people that are involved in looking at that stepping stone to what's always been considered the American dream of owning a home, there's certainly a need for additional single family housing to serve as an alternative at times for multifamily housing, i.e. apartment units. And it just gives another option for families in terms of their current living situation that ultimately can provide, again, a stepping stone to that first time home purchase.
Awesome. Well, great. Well, let's hope they figure this out, Bill. We clearly, the real estate market's jammed up. I know we're going to have a discussion with another real estate expert who was in the brokerage side of the industry, and they're laying off people because there's no activity and they can't get people to buy. But yet, when they do buy, there's a lack of supply, and it's really kind of very jammed up right now. So they really need to take a close look at this and get moving. And I bet it's not going to be solved in 1 year before the election. So we'll see how it affects the election too, because that's on a lot of people's minds.
Certainly, you're right. It's less than a year now before midterms, and I know that it'll be a much discussed topic here over the next several months and into the future.
Well, Bill, Resi's doing some really interesting things. You started out a little bit down that road. Tell us a little bit more about the model that Resi uses and how that can be really helpful in this market.
Sure, happy to. Well, first of all, Resi has a joint venture with Staubach Capital. And I'm sure a lot of people that are listening to the podcast recognize the name Staubach, and that is, yes, the Roger Staubach fame. And Resi and Staubach have partnered to form a company that effectively will work with national builders. And when I say work with national builders, Resi acquires newly constructed homes, single family homes from national builders, and then places them into the rental market. Uh, and why does Resi acquire newly constructed homes versus building the homes themselves? Well, yeah, Resi wants to mitigate risk. And by mitigating the risk, in terms of acquiring a new home, they really mitigate the development risk that would be involved with building a home from ground up. Number one. Number two, it's interesting in that once a home is acquired, Resi is able to leverage the builder homeowner's warranty. So typically those warranties will, number one, cover the structure for 10 years. Number two, the warranty will cover systems within the home for at least 12 months, usually up to 24 months. So that allows Resi as a company to have a very low operating expense ratio, specifically below 40%, which is quite impressive. Most multifamily owners, their expense ratio will be in the mid 40% range. We're able to keep that, again, expense ratio below 40%. The
Great.
other reason for Resi to really pursue its business model of buying from national builders is we're able to purchase homes that are, as far as the purchase price, all in, not just the structure, but the land, that would be approximately 15% on average below the appraised value of the home upon the date of the home having the certificate of occupancy. So, and why is that? Well, when you look at from a builder's perspective, the builder will have inventory of homes, and there's X amount of that inventory that, for lack of a better term, would be excess inventory that the builder wishes to really to take care of. That's where Resi can step in, and with Resi's buying power, they're able to negotiate seller credits, and again end up with ultimately a purchase price that's on average 15% below the appraised value of that home. I was just going to say the other side of the coin is it's interesting when on our website when our homes are advertised for occupancy. A lot of times we'll have over 10, 15 inquiries on a home, and that speaks to the fact that there is such a demand for housing,
Mhm.
and more specifically, a demand for rental housing. And there are two drivers to that demand. Number one, a lot of people that rent from a company like Resi, that's really the option that they have, as they don't really have the option, given their current circumstances, to buy a home. So the rental market is really very, very busy, you might say, right now, because of circumstance. That those ultimately those first time home buyers need to continue to rent until they have the ability to make that first down payment. And as we were discussing earlier, be in a situation where at least less than 40% of their monthly income doesn't have to be allocated to the mortgage, taxes, property insurance, et cetera. So that's one driver. The other driver that we're seeing really over the last few years, more and more, is that there are many people that choose to rent. They rent by choice, and why do they do that? Well, they love the flexibility. Uh, they could be an occupation. So, example, one of the markets where Resi has a really strong footprint is Dallas Fort Worth. Well, that's an area where there are many flight attendants, pilots, et cetera, that are based in Dallas, and they'd rather have the flexibility via rental versus owning a home. Uh, Also, when you look at it from just a dollars and cents standpoint, there are a couple articles that have surfaced over the last few months here. One from The Economist, the other from Axios, which provide the outcome of studies indicating that, hey, at the end of the day, it just makes good dollars and cents to rent versus buy. For those that have the choice, it's a better option to rent when you consider all of the costs of home ownership. It makes better sense to rent than to buy.
Mhm. Interesting. So things are changing, and it seems like certain things are happening. Let's just hope that they figure this out, Bill, huh?
Oh, certainly. Yeah, well, and as we discussed, it's cyclical. We look back to whether it was 40 years ago, the early 2000s. My last statement in terms of it's cheaper to rent than buy. If we were looking at the same analysis just 5 to 7 years ago, it'd be the exact opposite. It made when rates were low compared to where they are now, it made much more sense to buy versus rent. But we're in a market now where the rental part of the single family housing industry is in high demand. So we're fortunate at Resi to be in the place that we are.
Absolutely. Well, great. Well, thanks for all your work with Resi, Bill, and thanks for your input today. I think we all learned a lot. Let's hope our leaders figure this out, and it's going to take probably some government action to kind of spike the market and move things forward a little bit, make things easier to move. I know the new Fed incoming Fed chairman is looking to probably lower rates. That'll probably move things along a little bit. And let's hope they come up with a whole, as you say, multifaceted, multi-pronged approach here to get the real estate markets unstuck.
Totally agree. And I'd be remiss, Brian, if I didn't mention the fact that Resi does have an offering right now that allows investors to take part in a single family rental housing market via Resi. And I would encourage those that are listening to the podcast to contact you or other investment representatives at Four Star Wealth to find out more about our offering.
Absolutely. Yes. And you should talk to a financial advisor, everyone, if you're interested in learning about any of these offerings. Four does have a list of different types of offerings, but Ressi is certainly one of the best and one of the best real estate companies out there. So this has been a good discussion, Bill. Thank you very much. Thanks for being with us, and I hope everybody learned something. And let's see what our policymakers do. I always like to say we have to pray for our leaders. We have to pray for America, and let's hope that we figure this whole thing out.
Great. Brian, thanks again for having me on the show. I appreciate it.
Thanks for being here, Bill. We appreciate it very, very much. And thanks to all of you for being with us today on today's Market Explained. We're going to probably have a couple more discussions about this real estate market that seems to be vexing lots of folks. Bill, you are our first, and I thank you for your insights. And we'll be back, everybody, with another episode here very shortly. Thanks for being with today's Market Explained, and we're over and out for today.